Welcome back to another episode of The State of Sustainability. In today's episode, we are going to do something a little different. I have for a little while been wanting to dive into commodities that are at risk from a sustainability perspective. I have a sort of niche interest in commodities from a few angles. Longtime listeners will know that I used to be in the farming sector, but also actually soon after I graduated, I had this brief fantasy of being a commodity trader. This manifested in two ways. One is that I looked into jobs in the cocoa trading industry. There was this guy who was making news at the time who was nicknamed Chalkfinger after Goldfinger. And this was his nickname because he had tried to corner the global cocoa market. He had a very sophisticated operation where he had agronomists going out and visiting cocoa growing areas. He had actually seemed to have co-opted the UK Foreign Service as well to acting as satellite offices for his operation. And he gathered a huge amount of data on the global cocoa industry and tried to kind of corner the market by buying up stock. This made news, at least in my little news bubble when I was graduating. And so I thought, wow, that looks like a really interesting, exciting, fast-paced industry to get into. I didn't actually become a cocoa trader. I went into the less glamorous area of potato trading for a little while. Story for another day. This is not an episode about potatoes. This is an episode, however, about cocoa. The reason this came to mind for me for this episode was also just yesterday I was warning my niece and nephew that my dog Sassi must never be given chocolate because, of course, chocolate is potentially fatal for dogs. And so I thought, well, why not actually springboard off this inspiration and run our first commodity deep dive? And indeed, this one is on cocoa. So, why is this actually a really good time to be doing a cocoa episode? Well, cocoa has just run one of the most violent price cycles of any major soft commodity this decade. It's gone from a sort of running average of about $2,000 to $2,800 per ton as a normal range to an all-time high of about $12,000 plus per ton in late 2024, and then sort of collapsed again by about 70% to around $3,000 per ton as of spring 2026. It's now up again to close to $6,000, I believe, per ton as of mid-year. What you can see from this is this massive sort of swinging back and forth of cocoa prices. What is going to be an interesting theme for a few of these episodes that we might do is how volatility in general is on the rise. And anyone who's heard our episode a few episodes back on commodity price volatility will immediately be connecting the dots. We are seeing more volatility in commodity pricing, and we will see more volatility in commodity pricing, and the volatility will become even less predictable. What I mean by that is swings will get bigger, but swings will also be harder to see. We are going to spend this episode talking a bit about the supply side, which is how cocoa is produced and grown, and the impact of sustainability and other forces really on the production of cocoa. But we're also going to have some time talking about the demand side and just how the industry is responding and how that's shaping the global landscape for cocoa as well. Cocoa is very close, of course, to the hearts of most of us. And so I know that none of us would want to see a world where cocoa disappears. And we will talk a little bit about whether that's likely. Let's start by talking about where cocoa comes from. So cocoa is extraordinarily concentrated. By the way, I know that some of you may be deep experts in cocoa trading and commodities. I expect that most of you aren't. And so I'm going to try and give a bit of a primer here as well on global cocoa. But production is extraordinarily concentrated. About 40 to 45% of global supply comes from one country, which is the Côte d'Ivoire, the Ivory Coast. And about 12 to 15% comes from Ghana. So a majority of global cocoa production comes from just two countries, which makes cocoa extraordinarily exposed to adverse events, both climatic and, frankly, political as well. West and Central Africa combined, if you throw in Nigeria and Cameroon, takes the total up to about 70%. The rest of it comes from Ecuador, which is the fastest growing new kid on the block and has been developing higher yield varieties as well. And so exports from Ecuador are on the rise. There's also some additional capacity coming from Indonesia. So there's a sort of a long tail, let's say, of smaller players. But really what you need to think of for this episode is highly concentrated in West and Central Central Africa, and particularly Côte d'Ivoire and Ghana accounting for about 60% of global cocoa production. Global output has been around about, let's say, 4.7, 4.8 million tons in 2024, 2025, and we usually ping pong a little between a small surplus and maybe a small deficit. We're going to talk a little bit more about that as well. The production base of global cocoa is about 5 to 6 million smallholder farmers. There is a lot that can be said about smallholder farmers. Growing up in Pakistan, I found that the global development community always had an agenda to promote and encourage smallholder farmers. And the idea was that because smallholder farmers contribute to employment, because there are so many of them, there's an important poverty alleviation agenda to be contributed to by supporting smallholder farmers. My own view, which is kind of fringe in the development circles, I think, is that actually relying on a large base of smallholder farmers tends to decrease the resilience of agriculture and commodity production, which means that usually countries in the global south, countries like where I'm from, Pakistan, tend to be more exposed to volatility and in fact end up relying significantly on imports for any commodities where they don't have a massive home court agroclimatic advantage. I think some elements of the same are true for cocoa. You have 5 to 6 million smallholder farmers, as I said, mostly farming on a base of 2 to 4 hectares, a very small base of production. Just to give you an example, my flower farm, which was by no means a large farm in any sense of the word. You have a large farm typically can be 10,000 hectares, for instance, or more in Canada, in China, in Australia. Even a sort of mid-sized commercial farm in the US will probably be north of 1,000 hectares, I would say. My farm was about 40 or 50 hectares. And so imagine that the average cocoa producer is growing on 2 to 4 hectares of land. That's really not very much, which means this is basically a form of subsistence. This is the Uber driver of the farming world, who is typically having to underprice their labor, underprice their capital, underprice their entrepreneurship, underprice their land, just to find a way to feed their family. This is, aside from any sort of social issues that we might raise, this is not a really resilient base from which to produce one of the most valuable agricultural commodities in the world. Let's now talk a little bit about complications. We're going to talk about a few different supply-side complications particularly. The first one I want to touch on is agronomic decline. I then want to talk a little bit about land loss, and I want to go into climate and agroclimatic zone shift. And then we're going to touch a little bit on economics. Some of these will overlap and kind of exacerbate each other. On the agronomic decline, the biggest problem is that the trees themselves are failing. So the aging tree stock within West Africa is one of the challenges here when it comes to global cocoa supply. Most of West Africa's cocoa trees are past their productive prime. So a cocoa tree will take a few years really to start hitting its productive prime. And then around 25 years plus, it'll start to deteriorate. It was actually quite similar for the flower bushes that I was growing, where it might take you about 3 years to reach maturity on a bush growing jasmine, the kind of jasmine that would go into your Chanel number 5. The bush might then be productive for up to 20 years, but after that point, the bush starts to decline in its productivity. It's pretty much the same with cocoa trees, where the yield starts to drop, it starts to be worse at resisting disease. And so actually the income per plot that the farmer receives goes down. As it is, the farmers only capture about 6% of the value of the end product that they're selling, in many cases even less. We'll talk a little bit about the impact of volatility, which means that as yields start to decline, the farmer is really pretty stuck. It is worth talking a bit about diseases. There are 2 distinct disease threats. One is cocoa swollen shoot virus, CSSV, which is an existential threat to cocoa. It's incurable, it spreads via mealybugs, and it ultimately kills the tree. This sort of thing is actually quite common in the climate world. I think that one of these was responsible for killing off an entire variety of banana. This is a complete digression, but some of you may know that bananas are actually a grass rather than a tree. which means that every banana tree is basically genetically identical to every other banana tree. I'm calling it a tree, even though I just said it's a grass, which means that they're very susceptible to disease. Anyone who's seen those cartoons where you have a sailor slipping on a banana peel on the dock of the bay, and if you think about it, you realize you no longer slip on banana peels today because banana peels aren't slippery. It actually refers to a variety of banana that doesn't exist anymore, which was a greasy, oily, slippery banana peel. And it doesn't exist because it was completely killed off by disease. So something like the cocoa swollen shoot virus can actually just kill off a large chunk of the production of cocoa, given that it's also so concentrated geographically. It is estimated that about 17% of annual production losses might be put down to CSSV. There's another disease, which is the black pod disease, a fungus, and it's a seasonal threat. It comes in wet conditions and is responsible for rotting the pods on the tree. And so whenever there's heavy rainfall in Ghana, the price of the cocoa futures, which means that the amount that traders are paying for future stock, I'm simplifying, spikes when there's a heavy rainfall because people expect that black pod disease is going to kill off a bunch of cocoa. And then finally, if you kind of also just look at the agronomic impact, there's all kinds of randomized use of fertilizer, fungicide, improving and attempts at improving planting material. Sometimes farmers tend to underuse these things because they don't have the money to spend on them. And usually they buy these inputs from middlemen who function as loan sharks as well, selling them the inputs at a massive financing rate, which can be 25, 35, 40%, and then recovering it from the proceeds of sale. And sometimes actually farmers are convinced to overuse these sorts of inputs because they're told this will actually result in a higher yield, which it may do in the short term, but often isn't very good for the long-term resilience of production. And so on the agronomic side, there's a massive supply side risk as well, just in the nature of the plant itself. We are going to touch, by the way, on the fact that while trees are aging, it is actually pretty hard to put up new trees. One reason that I'll touch on here, and then we'll come back to others related to actually sustainability regulations, is that if you're going to use the same field for planting a new tree and you have this declining yield tree on that field, you're actually going to have to say, well, even though the yield is declining, I'm going to just take the hit, cut it down, plant a new one, wait 2-3 years for it to reach maturity. And actually, most farmers would rather take the declining yield than take the massive hit of cutting off that source of income and waiting 2 to 3 years for a new source of income to develop. Let's talk a bit about land loss. So this is kind of almost like in some ways a new phenomenon. And I've heard that in Ghana, this is called galamsey, which I might be mispronouncing, but it's basically about trying to gather gold and sell it. And so within Ghana is blessed with different types of mineral and agricultural wealth. And so in addition to cocoa, there are also gold reserves in Ghana. And recently, there's been this phenomenon of unlicensed artisanal gold mining that has exploded across Ghana's cocoa regions, often with foreign financing. I have heard from other Ghanaians that there are sort of these Chinese prospecting companies that will finance cocoa farmers to sort of cut down the trees and start prospecting for gold on the chance that they may find something. And if you have these sort of already low returns from cocoa because farmers don't capture much of the value, plus you have aging trees, declining yield, plus you have disease sporadically popping up when there's heavy rainfall and so on, then actually either selling or leasing your plots of land to miners for immediate cash or trying to prospect yourself might actually start to look appealing. And so what they do is they strip the land. Mercury and cyanide is used that ends up sort of poisoning the land as well, rendering it useless for cocoa production for a generation. And maybe you do, maybe you don't find gold. Either way, the cocoa is gone. And so more broadly, within the theme of land loss, you have an acreage freeze because of EUDR. This is sort of, I don't know if it's paradoxical, it actually seems quite logical. But if you think about EUDR and traceability legislation, the purpose is to stop deforestation. And so the idea is we want to avoid people cutting down forest land to plant plantations for agricultural production, including for cocoa, which means that actually if you would normally have expanded cocoa production by cutting down trees and planting cocoa trees, you can't do that anymore because that cocoa will become unsaleable into Europe. And so as a result, the whole sort of virgin forest recapture area just gets cut off for planting new trees, which means there's not really much you could do to expand cocoa production other than cutting down those old trees, where as we mentioned, there's just a real adverse incentive for farmers to do that. So you're sort of locked into this weird bind where the best places that you could grow cocoa are likely where there's already forest land. It's sort of it is land that could be available and could be useful for cocoa production. By the way, I'm not advocating deforestation. I'm just saying that from an agroclimatic zone perspective, if this is where the space is, and you can't use that space for cocoa production, all you're left with is the space that you're already using. And so there's this another problem area around land loss and the lack of availability of new land for cocoa production. Let's now talk a little bit about climate and agroclimatic zone shift, which is actually the problem that I was thinking of more when I conceived this episode and before I dived into some of these other challenges. But you have sort of this near-term weather volatility with erratic rainfall, drought, rain disruption, and you have this sort of supplemented by a structural shift in agroclimatic zones, which means that as a result of climate change, the area that is most optimized for growing a particular crop is now moving from one part of the world to another. We're seeing this all around the world. Just to give a quick 1 minute on what the value of agroclimatic zones is, by virtue of digression into my own life story, as I frequently do. When I grew up in Pakistan, I used to study in our geography books how Pakistan was blessed with 4 perfect seasons, in that we had a few months of the year devoted to each of the 4 seasons, winter, spring, autumn, summer, etc. And I learned later, actually, because my co-founder in my farming business pointed this out to me. He said, actually, these 4 seasons are an economic curse because it means that you're not really very good at growing any one thing. From an agricultural production perspective, the best outcome tends to be, in my opinion, where you actually have several months of a certain type of season where you can grow a certain type of thing for as long as possible. In the flower business, this meant that if you want to grow roses, the ideal situation is where you can have rose yield 7, 8, 9 months of the year. And so most roses are grown in a few different geographies around the world, around Lake Naivasha in Kenya, for instance, or in Ethiopia, or a few other countries in Latin America and Southeast Asia that tend to have this sort of agroclimatic zone that is perfectly optimized for growing this one thing under certain conditions of humidity, temperature, sunlight, etc., for as long of the year as possible. And that is the value of getting the right agroclimatic zone for the crop that you want to grow. Now, the agroclimatic zone optimization works in sort of these 2 ways, where because Côte d'Ivoire and Ghana are really well suited to growing cocoa, most cocoa is grown in these countries, in the same way that a very large share of the European rose supply is grown in Kenya and Ethiopia. And you therefore get this whole industry set up around that, the sort of the roasters, the traders, processors, even insurance. Everyone sort of develops these corridors where it is perfectly optimized to growing in a certain way. In the example of roses, for instance, you manage to get these large acreages of rose production, but you also have the whole logistics set up optimized to getting that at lowest cost over into Europe, where it's sold from having been grown in Kenya and Ethiopia. And the same thing exists for cocoa. Now, with climate change, the optimal agroclimatic zone for growing everything pretty much is shifting from one place to another. Some of you in the UK may have heard about how actually English wine is reputed to be getting better. I don't know this because I don't drink English wine, but it is reputed to be getting better because the actual agroclimatic zones is shifting from, let's say, France, which was much more conducive for growing wine, over towards to favoring England. We are likely to get more and more of these sorts of shifts everywhere in the world for every commodity, really. And the same is now true, or expected to be true, for cocoa as well. The expectation is that West and Central Africa could lose something on the order of 50% of the current climatically suitable cocoa area by 2050 under current projections of the impact of climate change. This is going to be a massive impact on the global cocoa industry, not just because it means that you need to start growing cocoa in completely different places, but also just because the whole logistics and supply chain is going to shift. Employment is going to shift radically. What do farmers do when they can actually no longer grow cocoa in these places at all? The areas that are most likely going to favor cocoa production in the future will be Nigeria, Cameroon, kind of it moves further east. But then when you think about how you would bring new acreage under cocoa production, you'd have to go for deforestation. Again, you're limited by that. So actually, we're sort of stuck where in any event, damage is coming to the industry, but there's not really a very clear way out. And so I think this is going to be This podcast is brought to you by Altruistic. Sustainability teams have one thing in common. They all have messy data sitting in silos across the business. This means 60% or more of their time is spent getting data into shape and not making sense of that data or using it to drive action. Altruistic's AI-based tools can help. Meet Evie, your in-house, always-on-call sustainability assistant. Evie works alongside you and your teams to clean up and transform your enterprise data into usable emissions calculations. Even better, Evie helps you interrogate this data, working like the junior analyst you wish you had. AI alone won't solve all your problems, but data transformation is one you can cross off your list. Visit altruistic.com to find out more. That's altruistic with a Q. This is going to be a real pickle, for want of a better word, and I am not yet sure how the world is going to handle it. Moving swiftly on to another depressing topic, let's talk about the economic engine that really entrenches the current set of problems that we've been talking through. One is the value split. And what I mean by that is that we're clearly talking about a massive set of risks to global cocoa production. In an ideal world, the producers who are exposed to those risks would have the economic resilience to manage those risks. Let me give actually another interesting example of where that is the case. Let's talk about textiles. Cotton production in Pakistan has been wildly variant. The yield seesaws up and down, water shortages, heat waves, all this impacts the cotton yield. Now, the cotton grower, unfortunately, is very exposed to this. However, the textile manufacturers, the sort of the industrial part of the value chain that sits just after the growers, has had historically the economic resilience to manage. And so the way that they have managed is that they have set up manufacturing capacity in other countries, in Bangladesh, in Sri Lanka, and so on. And then they source from other geographies as well, which means that they have had the economic capacity to diversify and protect themselves from the impact of climate change. Unfortunately, growers in general, and particularly the cocoa growers, do not have any of that economic resilience. Economic resilience doesn't necessarily mean you have a large store of cash sitting around. It can also just mean that you have the ability to, let's say, get insurance. You have the ability to raise debt, for instance, to set up new capacity. You have the ability or resilience to go a year or 2 years with lower income because you're making a trade-off to shift to new production, for instance. But actually, there's none of this because the value share that farmers capture is typically under 7% of the sort of value chain of cocoa, and in fact, often much less. The living income gap figures that I've seen are typically around 40% or 50%, which means that farmers tend to make actually less than they would need to make for even just a living income in the geographies where they operate. To make this even worse, the two major geographies, Côte d'Ivoire and Ghana, have administered pricing, which means that actually prices are not set by farmers. Prices are set by a central market-making organization backed by the government. This central market-making organization, which is called Cocoa Board or Triple C. Cocoa Board is in Ghana and Triple C is in Côte d'Ivoire. Both these organizations restrict or control what the price is for cocoa at the farm gate. And because they're government organizations, perhaps, there tends to be a bit of a lag where when the price for cocoa spikes globally, because there's like a shortage, let's say, or some, maybe a demand reason why it spiked, these agencies tend to be late to coming up and raising prices at the farm gate, which means farmers don't benefit from the massive price spike. On the other hand, if that price spike is followed later on by a price fall, often these agencies are late again and they've just realized, hey, there was a price spike, we're going to raise prices at the farm gate, which means cocoa production is no longer competitive and there ends up being an excess because buyers won't buy at those prices. So actually, this sort of controlled pricing tends to have a lag that ends up hurting farmers because they can't capture excess profit at a peak pricing, and they can't actually protect themselves against lower prices. In fact, they're exposed at lower prices because they're price mismatched versus the market. We've talked a fair bit about the supply side of cocoa. If you are not suitably depressed yet, let's now switch over to the demand side. It seems that manufacturers in general have responded to supply side volatility by reducing usage. What we can see from the data is that grindings have fallen. And so the drop in grindings across Q1 2026, for example, is about 7.8%. There has been a push towards reformulation and shrinkflation, which means smaller bars, cocoa butter being substituted with palm, shea, never sure how to pronounce that, and other fats and alternatives being used, smaller bars as well, pricing impact where producers are passing through high price increases for where they're continuing to use real cocoa or use proper cocoa. And analysts are increasingly expecting that a lot of these shifts are structural rather than temporary, which means that if manufacturers are substituting other materials for cocoa butter, they're likely not going to reverse that trend. If they've shifted towards smaller bars, they're likely not going to reverse that trend in the future. So the demand side is adjusting, but it's almost worse, because if what you're afraid of is that cocoa is gradually going to decline and maybe at some point even disappear from the world, the last thing you want is for supply side volatility and risk to be met by demand side shift away from cocoa rather than a demand response that can actually support supply in risk resilience. Because actually, as you shift away from cocoa, it becomes then a self-fulfilling prophecy. A bunch of things that are happening, I think, will influence our predictions for the future. So EUDR is out, and it increases the cost of the cocoa value chain. There's a massive traceability impact, but actually also it does just make it harder to find new places to grow cocoa. We are already seeing some impact on EUDR repricing the market, where you have this two-tier market of compliant versus non-compliant cocoa. And that's going to end up having a ripple effect on production as well. And, it remains to be seen how geographies that are producing non-compliant cocoa manage to continue doing that, because they will be unable structurally to ever charge a premium for any of the other aspects of differentiation that their cocoa might have. There's obviously a massive issue around forced and child labor. We haven't really touched on that in this episode. You could have a whole entire other episode in its own right on this, and maybe we should. But there's a bunch of stuff, I would say, that regulation has driven, which is going to impact whatever predictions we might make for the future. The industry is moving towards hedging and coverage. To sort of mitigate risk, at least on the buyer side. Sustainability programs are leaning in to try and mitigate the environmental impact of cocoa, but also provide potentially things like insurance solutions and support for farmers. My own read is that this is going to be a very small impact in the scheme of things. And actually, cocoa production is so intertwined across like a socioeconomic challenge in the geographies where it's being grown, plus an economic challenge, plus an agroclimatic challenge, that it leaves us in a real bind. And so I think if we kind of were to now move over to making some predictions, I think that the only real way to fix the challenges that we're seeing around aging trees, agroclimatic zone shift, economic adverse incentives, and so on, is to find a good way to reconcile ourselves with replanting cocoa, either replanting cocoa or finding new places for cocoa to be grown. We need to find some way to have a larger share of the pie go to farms to make them more resilient. The state board infrastructure is clearly not going to help this. I don't have high confidence in it getting a lot better. And so some sort of disruption needs to take place there. But given that it's state-backed, I'm not sure how likely that is. Regulation clearly needs to find some way to allow for adaptation of the growing ecosystem. But European regulation takes a long time to adapt. I think that might actually be the one that is able to give fastest. The others I don't see easy solutions for. Demand destruction will probably alleviate some of the supply risk in the near term, as there's just less pressure and therefore less risk as well on production. But maybe that means that actually real cocoa just becomes a premium commodity that could end us in an equilibrium of some sort, but it's not the ideal equilibrium, I would say, if a large share of the market just doesn't experience real cocoa. And so on the whole, I would say my predictions for this market is, I would say I don't see any alternative but for supply to decline long term. I don't see any alternative but for farmers to exit production. And I don't see any alternative then for cocoa to become an increasingly premiumized commodity on the demand side as the only way to get equilibrium in this space. I think price volatility will stay high. And I think that the area that we will probably see more innovation is around hedging products, insurance products, and other financial instruments that allow us as a value chain to cope with the inevitable volatility that this story is going to create. So not the most uplifting note to end on, but hopefully still an informative episode for you. If you liked listening to this episode and want to hear more from the State of Sustainability and never want to miss an episode, please hit follow so that you get the episodes as soon as they're released. We will always appreciate a review, a 5-star rating, or a share to those in your network that you think might be interested. So until next time, thank you so much and stay tuned.